Stocks slip on strong US producer price index data and some Fed members signaling more tightening ahead. Realty and IT stocks lead the decline. EVs and industrials in core sectors show resilience.
Minda Corp and pre-call promoters seem set for a long standoff after Minda makes an offer to acquire 15.7% stake in pre-call and its promoters reject it, claiming institutions with 16% stake are backing them.
Cement stocks gain on price hike moves in ahead of the Goods and Service Tax Fitment Committee meeting on Saturday. But CNBC-TV18 learns that review of GST on cement is not on the agenda for this meet. The industry is hopeful of a reduction in levy from the current 28% after the finance minister indicated a review.
Indigo CEO sees strong demand ahead and is confident of achieving the higher end of their capacity growth outlook of 13 to 17%. He is also bullish on international operations and is looking to add 10 to 15 foreign and domestic destinations in the year ahead.
Good afternoon. Welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Sonal Bhutra is joining in. Well, it's just one of those days when the market is really not doing too much. You'd have to say just gravitating in that range, a bit of a downtick for the index. What stands out is the weakness in banks. So the bank Nifty is down quite a bit, about 350 points or so. And overall, you'd have to say not just banks, even IT is dragging its feet today. So in that context, it's a bit of a disappointing day for the bulls. Let's see how the rest of the trading session goes. Give and take everything, this market is down about 1% for the week. So it has been, slightly under pressure the last few days. This 18,000 mark is, I guess, a bit of a hurdle for the market, just refusing to get above it.
Oh, yes, it is. Hi, Ekta. Hi, Sonia. When we are talking about weekly moves, right, how this 18,000 mark is something that every investor is watching out for as well. Couple of these sectors which has done really well, and Nifty CPSE index, that's the one that should come up for you on the screen. Very close to its 52-week high level, up 3.5%, the top sectoral gainer this week. And it is led by big moves that we saw in the constituents as well. For instance, Oil India, that one is up 18% after strong set of earnings. That's the case for ONGC as well. Windfall tax also aided the move this time. Cochin Shipyard is up 4%. We have NTPC gaining 2.5%, NMDC, BEL, all these stocks which make up the Nifty CPSE basket, they were higher in trade from around 3 to 17%. So yes, some green shoots in an otherwise very choppy and a market which has been declining, so to say.
Yes, Sonal as well as Sonia, I think that windfall tax cut was a big piece of news that came through this week. But I'm going to, just dampen the sentiment a little bit at this point. On a week-to-date basis, I'd have to say that though the Nifty has been quite resilient at current reckoning, it's up around 0.7%. It is the entire financial space which is now showing a few indications of weakness. For example, the Nifty PSU index, PSU banking index is down around 2%. The Nifty bank itself is down around 0.7% on a week-to-date basis. So there is some amount of trepidation which is coming into the financials. Week-to-date, for example, State Bank of India has corrected quite significantly, over 2.5%. If you look at a couple of these broader market PSU banks, also UCO, Bank of Maharashtra, PNB, all of these stocks have been lower on a week-to-date basis. And separately, it is the mid-caps. They outperformed last week. But this week, at current reckoning, let's see what the second half holds. But nonetheless, it's down around 1% for the mid caps. But that's on the markets at this point in time. We have a company lined up.
Oh, yes, we do. In fact, it was a subdued quarter for Techno Electric and Engineering. The company's net profit slipped over 70% on a sequential basis, while the revenue and EBITDA also saw a decline. The company has also sold off 37 megawatts of its 112 megawatts of wind power assets in Tamil Nadu for a near 160 crores. PP Gupta, who's the MD of Techno Electric and Engineering, joins us now. Mr. Gupta, there was a big decline in your revenues this time around. Can you tell us what the expectation is as we move along? You're sitting on an order book of around 4,000 odd crores. What is the kind of order visibility that you have?
Ma'am, I think these kind of times we have never seen in our sector. There is so much of reforms happening now. The government is come out with the Electricity Act amendment just a month back. And the stress is on making DISCOMs more stable financially, generators being paid in time, consumers being given a choice of power supplier and open access and whatnot. So a lot of things are happening at RDSS scheme where they have allocated 3 lakh crore. The stress is mostly on putting AMI solutions, strengthening the networks, and as well as making India carbon free, like a lot of happening on pollution control side, renewable power side, and I will say that all sectors are budging.
But Mr. Gupta, when you are talking about all sectors doing really well, demand also doing good for you, Q3 was a subdued quarter. Your EPC margins contracted by 130 basis points to 12.2%. Can you tell us what happened here? Will you see a recovery in Q4? And you've trimmed your revenue guidance as well. Can you tell us what was it earlier? How much have you trimmed it by? And do you expect this weakness to continue, or FY24 will see some recovery?
I will say this is a one-time blip, basically, which is more of a supply chain issue, where still the semiconductors, electronic components, and GIS modules in 765 kV are not easily available in the market, and they are little stressed. So, but the EBITDA level shrink is basically because our company is transforming. We are bringing in a lot more new talent to cater to data centers, to cater to AMI. So it is a transforming stage, and basically top line being a bit low in this quarter. So obviously overheads have eaten up around 1.5 bits, but that won't be the case in Q4. We are sure Q4 will easily achieve and make up whatever we have lost in Q3.
Okay, so that's exactly what I wanted to touch upon, a sequential recovery. You've said that Q3 was probably a one-off and Q4 will look better. Will it be completely normal, in line with what your expectations are? Or do you think that you will still continue to be hit with supply chain disruptions?
No, ma'am. You see, supply chain is a bit stressed, but we are definitely tied up better with the vendors, backed up by a lot of financial arrangements with them. So we have definitely programs. So we are likely to do better than normal in Q4, and we will make up the loss of under CR top line in Q4.
Okay.
Okay. Mr. Gupta, you also spoke about your wind assets and selling your non-core assets as well. The one that you sold in this quarter, 450 crore rupees, I think is the valuation. Correct me if I'm wrong there. What is your plan with respect to non-core assets and divestment there? Is there more in the pipeline? And what does it take your cash levels to?
No, time being, this completes our divestment as of now. And in future, as we create data centers, there will be the assets available to us for partnerships or divestments. The cash level in the company by now is almost 1200 CR plus, but we should close the year with almost about 1400 to 1500 CR.
Can you give us an update on the Afghanistan project? What is the status over there?
I will say that the local government have more or less now realized that ADB and World Bank are not going to come back because of their human rights challenges on their tables. So they are talking to us to revive these projects now in rupee payment, between Government of India versus Government of Afghanistan. They have identified 3 projects which are catering to Central Asia and not limited to Afghanistan. But our project is relatively strategic to them, and it is more than 80% complete. So it makes all the sense for them to complete it at the earliest. I'm sure the project should take off by May, June and be completed before end of 24.
Okay. Mr. Gupta, that's on Afghanistan. A lot of the companies have been facing problems in terms of receivables there, and that's understandable. But you mentioned that your cash levels will probably go up to 1400 crores. Correct me if I'm wrong and I mistook that figure. If it is such, what is your plan of utilization of that cash on books? Are you probably going to deploy it in terms of M&A? Are you going to deploy it in terms of rewarding shareholders? Are you plying it back into the company?
Ma'am, it is definitely a money belonging to the investors in the company, and they will definitely be multiply rewarded. But this money is also facilitating our going forward business under TOTEX model. Like AMI is happening under Totex model, and I see in very near future more projects should also start happening under Totex model, where all these financially strong companies will be better placed over others, I will say, going forward. So cash is king in our industry in near future. That's what I can see. I see a very strong traction next 3 to 5 years.
Okay, just last one question. You were looking for a JV partner for your data center, someone in the US and Singapore. Have you finalized anything? What kind of equity are you willing to sell in your data center business?
Ma'am, we are in a silence period with two of them, where we have signed NDAs. And as the asset is progressing towards completion, more interest is rising, and every day you see in media something or the other is talking about data centers and requirements and capacity building in our country. So I see a good, excellent scope to get a very strong partner in the near future.
Okay.
Maybe another 3 months.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. Let's take a quick break. On the other side of the break, we will focus on the buzzing stocks. Stocks are reacting to a lot of news flow. Do stay tuned in.
Welcome back. Still tuned into Halftime Report on CNBC-TV18, and there could be a takeover battle brewing between auto ancillary companies Minda Corp and Precall Limited. This morning, a large deal took place in Precall, and sources indicate Minda could have been the buyer. Sonia is joining us with all the details and what's brewing in this space. Sonia?
Well, thanks a lot for that. As you rightly pointed out, after a really long time, there's perhaps a takeover battle brewing between two companies. This time around, it's Minda Corp and Precall. Now, we do understand that there was, of course, a deal that took place today where Precall saw 4.3% equity change hands, and sources indicate that Minda Corp could be the likely buyer. We understand that Minda Corp is looking to buy a little under 16% stake in Precall. Now, we reached out to the management of Precall, and they have vehemently denied any kind of, takeover. They said they were made aware of this deal only last night. They definitely don't want to sell any stake. They are completely committed to the business. Forget about selling stake. They are not even interested in any synergies or working together with Minda Corp. They said that they are competitors and have taken market share away from Minda Corp. So first, let's listen into the management, and then we'll try and understand what could be the rationale behind this potential takeover.
I definitely do not want to sell. I'm 1,000% committed to this business. No, they are competitors through one of their businesses, but we have taken away a lot of market share from them. And I think in terms of technology and positioning, we are on a very, very solid footing with regard to our instrument cluster business, driver information, automotive electronics business, which is the only business that they compete with us in our portfolio of businesses. So I don't see any synergy in working with them.
Okay, as you heard, Precall is categorically denying any kind of hostile takeover. Nevertheless, if Minda Corp is indeed interested and they do go ahead with a hostile takeover, what would the synergies be? There's plenty of synergistic benefits over here. For one thing, Precall is the second largest manufacturer globally of instrument clusters and fuel level sensors for two-wheeler and three-wheeler applications. Now, instrument clusters are basically the various displays that you have in your car and the indicators that enable a driver to operate the vehicle. In India itself, Precall has 50% market share in two-wheelers and 70% market share in the commercial vehicle space itself. Not just that, they also provide connected vehicle solutions. There's telematics, onboard navigation, mobile screen mirroring, sensors. So this would be a big add-on to Minda's current portfolio. Precall is doing a lot of work in TFT screens as well for two-wheeler electric vehicles, and as we know, the entire Minda group is focusing on EVs in a big way. So when combined, it could emerge as a much stronger entity. Not just that, Precall has over the years cleaned up its balance sheet and improved its financials quite a bit. It's debt-free as on December last year, and it has free cash flows of around 112 odd crores. The earnings have also been very good. The revenues have gone up 26% in the 9 months of this year. The profits are up about 150% or so. Now, the Spark Minda Group has viewed premiumization of its products as a big growth accelerator. Hence, this acquisition acquisition makes sense, and Precall has said that mechanical and basic instrument clusters are moving towards complete digital clusters. Hence, there are synergistic benefits. But let's not forget that the stock is up about 66%.
Okay, all right, Sonia. Well, if you want to come in on this, Minda Corp has come out with a clarification, and they have confirmed our CNBC-TV18 news break as well, where Minda acquired that 15% stake. They've acquired it at around 208.98 rupees per share, which is worth around 400 odd crores. Well, Sonia, what are the incremental details we need to know about this transaction? Whom have they acquired it from, or what would be the strategy of Minda Corp going forward?
Now, this is very interesting, right? This confirms the news break that Minda would be acquiring 15.7% stake. My colleague Nimesh did put out last evening itself on closing bell that this acquisition is all set to happen. So this is the CNBC-TV18 news break confirmed that Minda will indeed acquire 15.7% stake in Precall. Now, despite this could of course turn out to be a hostile takeover, because Precall, as we heard, has vehemently denied they are not looking to sell their promoter stake. Now remember, the stake that institutional investors have in Precall is about 16%. Now, what can Precall's next action be to avoid a hostile takeover? As we heard our legal experts say a while back, Precall has cash of around 112 crores on their books. The promoters could easily use that cash to buy from the...
I just want to come in because, one of the objects and the effects of the acquisition, and maybe the management can eventually confirm this with us, they have indicated that this is merely a financial investment without providing the company any special rights in Precall Limited other than the rights as a shareholder of Precall Limited. So this is basically the details which have been given as of now in the press release. So this is what we're picking up in terms of what they've issued to the stock exchanges. It's an open market transaction, no prior approvals have been obtained, and they've clearly indicated as of now within the press release that this is merely a financial investment without providing the company any special rights. So that's the detail which is coming in. They've acquired 15.7% stake, which has taken place at around 208.98 rupees per share. It was bought via the open market, and it was completed entirely today. So remember, this was Nimesh's story, and he did bring us all of the details and the possibility of this taking place, and it has come through, and this is the notification which is coming from Minda at this point in time. Any more details?
Okay, so yes, the important factor, of course, is the fact that they say it's just a financial investment and they are subject to just the rights that any normal shareholder would get. There are no special rights which will be given to Minda Corporation. And we did hear Precall's management earlier in the day today as well, where they said that they do not want to sell anything from the promoter's angle as well. And that is not something that they're looking for. They're just competitors, do not intend to work with Minda Corporation in the future. And they have been gaining market share versus Minda as well. So Sonia, your take on this? This has been finalized, but it says, of course, it's just a financial investment.
It is just a financial investment. So let's see how it transpires so far. As we've been telling you, there are, of course, synergistic benefits eventually. For now, it is a financial investment. What the next step is, we'll have to, of course, find out from the management. But there are a lot of synergistic benefits. I mean, it makes sense to acquire a stake in Precall, considering how Precall A is a debt-free company, B, it is growing its presence in the electric vehicle space in a big way. The earnings have been very strong for Precall, and in this instrument cluster space where Minda is also present, they are looking to sort of grow their presence there as well. Precall already has 50% market share in the two-wheeler space in India, 70% market share in the commercial vehicle space. So it does make sense for Minda Corp to go ahead with this kind of investment. But as Minda Corp has put out a clarification, and very important one at that, there is no special rights in the company that they have. It's merely a financial transaction.
I think that's the important detail which is coming in, that they will hold 15% stake, but as of now they just are shareholders. They have not indicated anything which is indicative of a hostile takeover at this point in time. So we can probably get to Nimesh now. He's back with us to give us more details on what he's picked up. Nimesh, well, congratulations are in order to you, but nonetheless, give us more details about what you're picking up.
Well, as things stand, what you have read is what even I've read from the press release of Minda, that they've confirmed that they've got 15.7% stake in Precall. Now, As the press release indicate, they're not, as of now, they're not talking about any hostile bid or any stake in the company, or they're not even confirming that they're talking to the pre-call promoters. Now, it's going to be very interesting, right? I mean, they bought 15% stake. They're investing 400 crores in pre-call at a price of 209. I was just looking at the shareholding pattern of both pre-call and Minda Corp as well. There is one common link. You know, if you look at the shareholding pattern, there is one private equity investor who owns stake in both these companies. So, you know, now the things to watch would be who are the investors who've already committed, you know, in the reverse book to Minda Corp. So that will be very interesting to figure out. Now, we heard what the pre-call management said, that they own 36% and they were backing of another 16% as well. So it's going to be, it looks like it's going to be a little tricky from here on. So two things now. One, now that they've acquired 15.7%, we'll have to see what Minda does going forward. I believe there's going to be an investor call as well, you know, where they're going to explain to the investors what is the rationale for taking this 15.7% in pre-call. It's going to be, as I said, you know, it's going to be a little tricky from here on. But my sense is the first step of buying 15.7% and showing an intent of, you know, looking at this company is done by Minda. Now the second step would be possibly a discussion with the pre-call management if they want to offer and if they want to buy and you know, make an open offer as well. So that is something we just see it is speculating, and that's the feedback to me as well, that maybe going forward, this is the first step, and the second step could be they may offer the pre-call promoters to buy them out and make an open offer as well. So that's something to try going forward. But as things stand, there is a confirmation from Minda that they have acquired 15.7% by reverse book building in pre-call limited.
Okay, we don't have any indication or sense of who they've acquired it from, right? Because pre-call was very confident, Nimesh, that they have the institutional investors on their side, and we do know that institutional investors hold about 16% stake in the company, and they've assured them that, you know, they have their backing. So we don't have any clarity on where it's come from.
Sonia, even I don't have enough clarity on where this has come from, but if you look at pre-call's shareholding pattern, apart from 36% with the promoters, there is a very fairly large institutional holding as well. The mutual fund owns 4%, the FIs own close to 12% if I remember correctly, and there are a couple of private equity investors own combined own 10%. So 10 plus FIs of 12 and 14. So nearly, you know, there is almost 26% of stake which is outside of promoters, and some of them would have participated in today's reverse book building. So anyway, it looks like, you know, now that they've announced that they've got 15.7%, I believe in due course there will be a clarity as well, and who are the funds who have already participated and tendered, you know, in favor of Minda. So that's the first part. As I said, you know, there are some common investors as well, especially a private equity investor who owns stake in both the companies. So need to see if that particular fund has participated in favor of Minda. So, you know, there are some question marks which needs to be answered, but the fact is that they've got 15.7% means that they are very serious to look at pre-call. Now this next step will come on whether they're going to talk to the pre-call promoters and look for a possible merger between the two companies.
Okay, all right, Nimesh. Well, you know, I just want to add something to Nimesh's story. It reminds me of Serum holding stake in Panacea Biotech. And they both are vaccine manufacturers, and they held it for the longest time, but they've not done anything. You know, it's around a sub 10% stake, a significant stake that Serum held in Panacea. We've spoken about a possible takeover for years together, but it just remained a financial investment.
So maybe.
So let's see.
Yeah.
I mean, we need some clarifications from Minda, and they've clearly stated in the notification that right now it's a financial investment. Nimesh, back to you.
Yes, you know, you're right, Ekta. You know, at least the press release of Minda very clearly says that it's a financial investment. They're not looking for any rights except for the fact that whatever the normal shareholder rights are there for any shareholder. So that's the intent as of now from Minda. But, you know, putting in 400 crores, buying 15.7% without talking to pre-call promoters and buying from the open market from institutional investors means that there is some seriousness to this. So needs to see how it pans out. But yes, 15.7% is a big stake that they're putting in, and putting in 400 crores in pre-call. Okay,
this is an evolving story. So we will, of course, track it very, very closely. Thanks a lot, Nimesh, for that. Let's not forget that the pre-call stock has gained a lot. It's up 66% in the last 1 year. Of course, it's also because the company has improved its balance sheet, has reduced its debt and built its financials well. But perhaps a lot of it now, there's a little bit of taking as well that you're seeing, down about 4%. Let's slip into a quick break. On the other side of the break, Prakash Gaba will join in for some trading strategies. Do stay tuned in. Welcome back. Well, so much happening in trade this afternoon, but for the market, it's still under a bit of pressure right now. The Nifty is down about 95 odd points. It's been all over the place through the course of the day. First, we saw a recovery, then a bit of a sell-off. But one thing is for sure that the bears, have the market in their grip. And that's what you're seeing on the Bank Nifty as well, down over 500 points. Ipca Laboratory is also taking a beating, both post its conference call. Ekta, what went wrong this time?
Well, yes, it was a weak set of numbers for Ipca. They came out with their numbers last week, but they held their conference call last evening post-market. So it's really reacting to its conference call takeaways and what the brokerages have made of it. So I'll just take you through the numbers briefly. Revenue was strong. It was up around 8% largely in line with estimates. It was the EBITDA, which was down around 30% on a year-on-year basis. Margins, which came in at around 14% versus 21.5%, and profit at a little over 100 crores. Q-on-Q as well, margins 14% versus 16%. Now, Q3 was impacted by high input costs, higher OPEX, NPPA impact in the domestic market. Macquarie, Motilal and Nuvama have written on it. Macquarie has said they've retained their underperform rating with a target of 810. According to them, the Q3 EBITDA and profit missed estimates respectively, but the revenue was in line. The Q4 FY23 EBITDA margin is expected to be softer than Q3. The margin guidance for FY24 is 21%, so it will be quite a tall task to get there. Lower FY23 EPS estimates by 25% according to Macquarie, and FY24 and 25 EPS estimates by 9% and 7% respectively. Motilal has a buy, target price 990. Operating deleverage has played spoil sport according to them. Nuvama has retained a buy with a target price of 1010. They've said that the double-digit growth in FY24 and FY25 is not under threat as the API and generic exports recover. So let's see. There's expected to be a margin recovery in FY24. FY24 in terms of growth is expected to be better. It's a lot of deliverables. Let's see if that comes through or not. Brokerage is largely positive on the longer term. But Sonal, you're filling in for Mangalam. Tell us about Nestle.
Nestle, it is lower in trade today, and that is because while operationally it was a better quarter, volumes were much lower than what the street was working with. And brokerages, they have a mixed view as to how to look at the stock from here on. Goldman Sachs has a neutral view with a target price of 19,900 rupees per share. They say, yes, Q4 of calendar year was in line with expectations. However, volume growth sharply moderated this time around because of large price hikes that the company took in low unit packs. And that's why they've cut their EPS estimates marginally by 0.2% for this year, and for the next year by 1.1%. Morgan Stanley has an underweight rating as well, with the target price much lower. It's at 15,315 rupees per share. They say Q4 was below expectations on top line because of lower volumes, but margins were much ahead. They remain underweight due to the margin pressure they expect, which will continue. Relative valuations as well is what's something they don't like. Jefferies also has a hold rating with a target price of 18,100. Volume growth decelerated to, say, a multi-quarter low this time around for Nestle. It was a margin-led beat this time. They say management attributed part of their volume slowdown because of price hike in Maggi. That is something which impacted volumes. That's because Maggi price hike was done, but that is not what the competitors did in the same price band. So that is something which hit their volumes. JP Morgan, on the flip side, has an overweight rating. They say now going forward, they are focusing on cost, and that is something which will aid their margin. So yes, largely on the underweight side, and who would have imagined that hiking Maggi prices would impact consumption? I thought nobody cares about that so much.
I know, I mean, and that means inflation is really hitting hard. They're pinching pockets quite a bit.
That's the ground reality,
Maybe people are getting a little healthier incrementally.
All right, we'll slip into a quick break on that note, but on the other side of the break, Prakash Gaba will be joining in. He has some trading strategies going for us, so don't go anywhere.
Welcome back. Well, it's definitely a rough ride for the Bank Nifty, so it's down around 1% at this point in time. We have the mid caps also, which are underperforming, so down around 0.7%. The Nifty has slipped below that elusive 18,000 mark, so 17,953 is where it's at. Let's see whether we manage to sustain and crawl back to those levels in terms of closing on a week-to-date basis. A couple of stocks which seem to be buzzing around, and this is from the pharmaceutical space. They all came out with their numbers on the 14th and the 15th mean, just towards the end of earnings season. Supriya Life, which is now bounced back after what was a very weak showing this quarter. So that stock is up around 6.7%. And even Shilpa Medicare, which post numbers was down, is showing a bit of traction on the upside. So that stock is up around 7.5 to 8% at this point. So do watch out for both these stocks starting with S. Well, Prakash Gabha joins in on the technicals this afternoon. Prakash, hi, welcome to the show. Well, you know, there is an underperformance which is taking place for the financials on a week-to-date basis as well. How would you approach the banks? Any specific banks you would have a strategy on?
Any specific bank that I would have a strategy on? Now, that's a difficult call. Because to me, when I look at the banks, they're all looking weak, perhaps except, I would say, HDFC Bank. It's just showing some kind of resilience. So if there's a bank here, perhaps I would say 1640 seems to be a strong support move on HDFC Bank. If it has to bounce, the place is right. So if it happens, it can go to 1675 to 1700. So I would like to buy dips on HDFC Bank only because I feel there's a strong support in the vicinity of 1640 or so.
Okay. And your take on the index moves, Prakash, because we are seeing some weakness today.
Yes, weakness is there in Nifty and Bank Nifty as well. Nifty has fallen. It's seen kind of a double bottom here. It's somehow today's morning low is held. So very good chance we can see a bounce if it has to. It's stretched to the downside. Bank Nifty looking more weak. It's actually fallen down from the levels of 41,500 to 41,160 now it's very trading. I think 41,100 seems to be a strong support zone for today. It should hold there. Even if it does slide, it should halt there. That's the place I would look to halt. How do we see it on Monday? Maybe a bounce from that is possible. So far, I see is weakness in Nifty and Bank Nifty.
Weakness in Nifty and Bank Nifty. Any other stocks that you're looking at, Prakash, where you perhaps see some amount of recovery? I mean, this week, if you look at it, IT stocks have done well. Tech Mahindra is the best performer. Reliance, Tata Steel, L&T, not too bad. Anything that you would buy on a dip?
Asian Paints. Okay. I think that's a stock I'm looking at. It's formed a good base, holding it out. I would say that Asian Paints has a very strong support in the vicinity of around 2,800 or so. So as long as that holds, there's a good chance Asian Paints can climb to around 2,900. It may take a day or two or three, but it looks like it is showing resilience and it could hold Asian Paints.
Okay, all right, Prakash, thank you so much for joining us and taking us through your technical bets, and have a great weekend ahead. That's on the technicals of the market. For now, we'll slip into a short break and get you more on markets and a lot of stock-specific action that we are identifying. Stay tuned for that. Welcome back. Market's still under pressure. Nifty is down 90 points and the losses are led by Bank Nifty. That one is sitting with cuts of 500 points. But of course, inflation has been a concern for all markets all across the globe. And ever since the Jan CPI came in at a higher than expected 6.52%, economists have been pointing out that this is because the NSO may have made a mistake of overestimation of the cereals inflation. SBI argues that the CPI figure of 6.52% may be correct. Lata is joining us to explain us why. Lata?
All about, Lata? Well, actually, that 6.52 January CPI caught everyone by surprise because the average of the street was 6.1. And what everyone pointed out was that 2.6% month-on-month cereals inflation and year-on-year 16.18 is not adding up. And why were economists complaining? Because you get the disaggregated number. Cereals is one number. If you go dig further down, the database tells you rice inflation, wheat inflation, jawar, bajra, coarse cereals, you know, the whole thing. If you added that up, you got more a number of 0.8 and not 2.6%. Was their point. Now, what SBI is arguing is, and it sounds convincing, that this is only part of the way in which the cereals inflation is calculated. Remember, on December 23rd, the government ended the Anna Yojana. And instead of getting 10 kilos of nearly free food grain, 5 kilos was free and 5 kilos was 2 rupees, the government collapsed it and said only 5 kilos are going to be available free. So the common Indian actually went to the shops to buy the remaining part of the grain, and the NSO has added the market price of the remaining grain, and that is why the cereals inflation is higher than what economists are mathematically calculating. In fact, the SBI report is very interesting. Soumya Kanti Ghosh, the chief economic advisor, is pointing out that if you added the items and came to the whole, then fuel inflation has been repeatedly understated. You know, the CPI overall data has cereals, fuel and lights, services, etc. Fuel and light for the past year and a half, he says, is understated. If you count light, power, kerosene, etc., the addition would come to much higher than what they said. So he says it's actually compensating. You understated fuel, you're overstating cereals. The actual inflation at 6.52 is more or less the correct statement of affairs. He goes on to say that it's not going to come down that easily because the core inflation, services inflation, has been sticky from 2012 between 5.75 and 6.25 thereabouts. That's not coming down anytime soon. 6.5 or thereabouts will be the Feb inflation. It comes down below 6 from March, but even then, you know, it's you're going to see a higher base for April, May, June. People were expecting it to come under 5. Now it's going to be probably 5.1 or something, despite the very high base. Short point, you should expect the Reserve Bank to keep rates higher for longer.
Okay, all right, Lata, thanks very much for that. So maybe that headline figure of 6.5% will stay in terms of the CPI for the month of January. Time for a break now. On the other side, Manisha Gupta will join in.
Welcome back. Well, we're just counting down to the end of the show and end of the hour as well. The market is, you'd have to say it's down but not out. So that's the only way to put it. The Nifty is down about 80 odd points. The Sensex is down 260 points. So we have moved to the low point of trade, but there's no alarming or cascading fall. A lot of stocks are under pressure. Nestle, SBI Life, IndusInd Bank, HDFC Life are under pressure. And in the broader markets, you have some big volume and price losers. Especially in, a couple of spaces like consumption. So just putting some of them in front of you. Vodafone has been, of course, under pressure for a while. So that one's down 5.5%. And Adani Group stocks, Adani Transmission, Total Gas also under pressure. But Manisha Gupta is joining in to give us a quick update on what's happening in the world of commodities. Manisha, over to you.
Thank you so much for that. And joining me is a very special guest. We have Dr. Andrew Green, of International Zinc Association. Dr. Green, hi, thank you so much for joining us. And zinc clearly is the topic conversation right now. We've seen the prices continue to be very volatile. Actually, where we started this year is exactly where we are after putting that 10% of gain into the year. But when it comes to demand on the other side, how do you see the numbers now ranking up in the global markets and India too?
Hi, Manisha. Thanks for having me. It's, as you said, it's been a very volatile year, and it has to do with a lot of the factors going on with I think the world coming out of the COVID crisis, the energy crisis that's going on in places like Europe, and that's affected the supply chain. The demand has been ticking up as well. So I expect more volatility going forward as I think the market seeks to balance itself going forward.
What is your sense on the Indian demand right now? How would you categorize it? How much is India using in sense of galvanizing? And is that number expected to grow moving forward?
Yes. Right now, we view the market in India around 1.1 million tons. And obviously, the majority of that's going into galvanizing. Over 60% here in India is going into the galvanizing market for infrastructure, for automotive, and so forth. And we expect that to grow. We've heard a lot of experts last 2 days talking about this at the Global Zinc Summit here in New Delhi. And the forecast is very positive. For example, automotive. There's only a 20% intensity of use in the automotive sector right now. And the global average for that is around 90-95% for galvanized auto bodies. So there's a huge opportunity for growth there for India. And then if you look at the infrastructure, Prime Minister Modi's investment into the infrastructure creates a lot of opportunities for sustainable and safe buildings and infrastructure implementation by using galvanized on rebar, on the panels and so forth. I think this is critical for sustainable growth here in India.
Dr. Green, also, when you look at the galvanizing demand, how do you see India vis-a-vis the world? How do the numbers look there?
Yeah, that's where there's a big discrepancy. Like I said, the global demand right now, or use of zinc and galvanizing on automotive, as an example, is around 90-95%. In India, it's around 20%. In terms of per capita use, it's less than 1 kilogram per person, and the global average would be around 3.5 to 4. So in each one of those cases, you're a factor of 4, a factor of 5 lower than where it really needs to be relative to what we're seeing globally.
Dr. Green, in various other countries, we've seen a government mandate as well. When you look at the safety measures in various sectors for the use of galvanization, in the Indian markets, that pretty would be desirable too. But we do understand that that's not the kind of representation that we've seen come in from various sectors within India. How do you look at the international government measures vis-a-vis India?
I think it's always a difficult situation for governments with this. You don't want to be too strict with the policies. You don't want to be less strict than what you should be, and it's hard to find that sweet spot. But we do think that there is a space for the government to enact some policies regarding, for example, the use of galvanized steel for the automotive. Again, it's about safety and sustainability. For rebar, I think if there was a mandate, a recommendation, a standard for galvanized rebar, for example, going into infrastructure, that would be a critical step forward, because you're not just talking about long-term sustainable building. In that case, you're improving the safety, but you're also decarbonizing. There's been information coming out showing that if you galvanize that rebar, it really improves the longevity of the concrete, and it can massively reduce the carbon footprint of that concrete, which, globally, concrete represents about, I think, 5% of the global footprint. So it would be a big impact for there. So lots of opportunities, certainly, for the government to step in and enact some policies in those cases.
Okay, Manisha and Andrew, thanks a lot for stopping by and speaking to CNBC-TV18 on the outlook for the metal prices. Appreciate your thoughts. On that note, let us wind down this edition of Halftime Report. We leave the markets under pressure, actually, down about 100-odd points for the Nifty. The Bank Nifty is the one that's exerting the most amount of pressure, down 600 points. But let's see how the second half of the trading session pans out. It's a wrap on Halftime Report.